Hello everybody, welcome to Moneyness Report. Today we are going to discuss about intraday trading setup. In this, I will discuss about how my charts look while taking intraday trades. So, right away moving into the topic, I prefer trading Nifty and Bank Nifty for intraday. These are the indices. These are the one major indices traded in India. The reason being is very simple. The volatility of this index or both indices is not high as individual stocks. The movement of 3% or 5% in these indices is very rare, but we can see a movement of 5% to 10% on individual stocks very frequently. So, trading in indices gives me ample time to take my decision. Looking at this chart, this is a plain chart. This is a line chart. There are no indicators. There are no volume indicators or any other price indicators. This clearly gives the idea where the stock is moving or where the index is moving. I use three tools, majorly the support and resistance, Camarilla support and resistance, and central pivot range. These are all levels derived from single values. These are all derived from OHLC. That means these are all derived from previous day open, high, low, close. Here is the formula to derive support and resistance for intraday based on previous day's high, low, close. So basically when we are looking at the support and resistance, the basic support and resistance that I'm talking about, there can be one pivot point, a central line. Above it we have resistance 1, resistance 2, resistance 3, and below the pivot point we have support 1, support 2, and support 3. Majorly an index trade in between these levels. While crossing these levels, it will show some respect to these levels. Based on the consolidation or breakout at these levels, I take decision whether to go long or short for intraday. Here is an example slide to indicate normal regular support and resistance. These levels R1, R2, R3, S1, S2, S3 and pivot point are calculated based on yesterday's open, high, low and close values. Let's see if these are respected today or not. Here is the opening. Directly it has broken S1 and tried to breach S2. That's fine. But when it is trying to move up, it saw a resistance here. Why? Once the support is broken and moved down, while again bouncing back, the same support will become a resistance. We can see this activity here as well. Once this support is broken and moved up, which turned out to be a resistance, and moved up, we can see a proper uptick here, and it has easily crossed R1, the pivot one, the pivot point R1, and saw a small resistance at R2. Now, to break this one, it has to take some consolidation, some strength, and break this level as well. After breaking this level, we can see a stiff resistance at R3. It was not able to break R3 for the entire day. This is what the normal support and resistance we talk about. The pivot point we discussed in the previous slide can be further divided into three levels. For example, this is the pivot point. Here is this resistance 1, resistance 2. Here is the support 1. The pivot point, the single line can be divided into three lines. This way, the top line and the bottom line. These entire three lines are called central pivot range. There are few implications based on the width, wideness between these lines. If these lines are very close and narrow, there is expectation that this stock can be trending. Also, these lines are wider. The expectation is that this stock can be range bound for the day. And when these lines are wider, it is very tough for a stock to break these lines and move either side. For a narrow CPR, it is very easy for a stock to break these lines. That means for the wider CPR will act as a more support or bigger support or resistance. The narrow CPR might not act a bigger or stronger support and resistance. So moving to Nifty 50 chart. This is an single day chart. This is a line chart. So we can see for August 13th, the market opened here and closed here for August 13th. Now, this is a line chart. This kind of line chart will only give me the position of prices. Apart from that, I don't get much information. So, to trade for intraday, I have to see how the stock is looking. So, for this, I go for candlesticks. This will give me an idea showing where the positiveness is. For example, this is a candlestick which represents 5 minutes. So if this is a like this, there are many green candles, that will say that there are more buyers, and less red candles will say that there are less sellers. For example, we started day here and moved till here, and if you see here there are three red candles, and after that, suppose there is no green candle like this, and there is one more red candle going to form. Instead of green candle, there is a red candle going to form here. Then the day would not close here. The day would have closed somewhere here at these levels or at these levels. So each candle will tell me a different story. The the body and the length of the candle will tell the strength. Bigger the length of the body of the candle, higher the strength. This view of chart is a bit different compared to the previous one. Here I have added few levels. This is the pivot, this is the resistance 1, resistance 2, resistance 3. This likewise we can added support 1, support 2 and support 3. So this is the pivot point. Instead of just single pivot point, added central pivot range. This is the top CPR, this is the bottom CPR. Now this will tell me where my index or my script is moving. For example, it has crossed R1, that means it is positive and moving strong. With what type of candle it crossed R1? With a small candle like this, with a small candle like this, with big tails. If it would have crossed R1 with these candles, the strength would have been very less. But it opened above previous day high and crossed R1 with a bigger candle. That means the buyers are more in the market today. And while breaking R2, it has broken with another good green candle, and never never you can see that the body closed below R2. This candle, this candle, this candle tried and body never closed below R2. Here as well, the body did not close below R2. That means this R2 has broken with good green candle, that is a strength, and you can see this acted as a support. This acted as a support for another 1 hour, one and a half hour. Now after that, after acting this as support, since buyers are high in the market for today, it started moving again further direction. While moving here, again with it tried breaking here the R3, it tried breaking here R3, but the body did not close above R3. Here it just opened below R3 and the body totally closed above R3, and it sustained it sustained here. There was some jittery here and there, but it came back with strong green candle. Here is a weakness, here is some weakness, here is a major weakness, but it came with a good green candle saying that the buyers are still alive. So this is how the candlesticks combined with support and resistance will help me to identify the direction and strengthness. Reading the each candle. Basically, I am reading the 5 minutes candle for intraday. So where would I enter here? My entry would be somewhere here after breaking R2. Entry would be somewhere here at R2 and exit would be my stop loss. My stop loss would be somewhere at these levels. After breaking this point, I would enter somewhere at these levels and my stop loss would be the low of this breaking candle. So I would enter here and wait it reach next resistance R3, and I would ideally get out at these levels once R3 is broken. That is how I look at intraday. These kind of setups would not come every day, but one has to sit with patience, wait, look for the setups to come, and act accordingly with proper risk reward to make a reasonable profits. These are another set of support and resistance. These are called Camarilla support and resistance. Here, this is the H3 level, this is H4, and this is H5 level. These are the higher side resistances. These are the lower side supports. So we can clearly see H3 is easily crossed. If this is crossed, as per this setup, Camarilla setup, H3 is crossed and H4 is crossed, that is going to be a positive trending day, and entry can be taken somewhere here once H4 is broken on upside. Similarly, once H3 is broken, it is observed that once H3 is broken, the stock would fall towards the L3 level. These are L3, L4 and L5 levels. These are the low levels. These are high levels. Low levels are called supports, high levels are called resistances. So once the stock breaks this level, it might break CPR in between and definitely reach L3 levels. Once L3 level is broken and L4 level is broken, there are high chances that it turns out to be a downward trending day. So apart from normal support and resistance and CPR, this using this also sometimes helps us to identify the major resistances and supports for intraday. So combining the normal support and resistances, central pivot range and Camarilla pivot lines, it might look a bit clumsy here, but at times this gives the clear picture where the script is moving, where the stock is moving and where it is not moving. For example, this has crossed R1 and moving further and crossed R3. That is the first sign of danger, and crossed H5 as well and moving down. That is second sign of danger. If you did not place stop loss here, you should place stop loss somewhere here, as if you are long. That is how this will help in safeguarding the profits or identifying the possible trend. But this is not the holy grail strategy. Hope we have learned something today and this is helpful for us. On this note, closing this session for the day. Thank you.